Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey, greetings, and thank you so much for joining us. It is Macro to Micro Options Power Hour. I'm Samantha LaDuc, founder of LaDucTrading.com, joined by Hans Albrecht, options mentor and educator and trader extraordinaire. He's actually West Coast. I'm on the East Coast, and we're coming together usually on a Wednesday after market close, but it was too eventful yesterday on the home front, but also on the market front. We had 3 Mag 3 reporting, 1 tonight, and Fed Day. So it was a lot to take in. Much better to do it now. Fed Day was pretty much as expected, in fact, 100%, even from last year. This was really Fed pause, and they did exactly as expected, even with a little bit more hawkish talk from Powell by removing some language around inflation and such, which caused the yields to pop up just a little bit. But it went right back down, and bonds are still, and yen and gold are still fine. That was one of the macro trends that we keep revisiting every week because that's one of mine. And we do want to talk about gold for sure, a little bit of bonds. But as you know, Mag 7 reported Microsoft got hit, Meta was priced for perfection, and Tesla's not going anywhere fast. It was really a premium seller's dream, and that was the only thing I could really say about it yesterday after I closed my pre-market, when everyone's like, what do you want to do with these Mag 3? I said, I just want to let them get done so we can deal with it after, because it's really just a premium seller's dream. So long story short, we're coming together today. We're going to talk market sector rotation, stocks of particular interest. And it's interesting because Hans, you and I were talking about the software rotation from chips to software. And this was a theme last week with the Thursday into Friday rotation. Twilio took off on Investor Day. And this had been a theme of mine since September, October with these SaaS reacceleration plays. And then they all started just popping up like daisies after semis got crushed on Monday with the DeepSeek sell-off. So it was really, the semis were deep-sixed on this DeepSeek, and we actually had a strong rotation on Monday, 2-to-1 advancers into value as well as software. So now we're going to talk a little bit about that. AI Euphoria is still in the room. And because of that, we have some trades obviously related to the software space, and then how to defend. Nvidia obviously threw a big 1-2 punch with a 17% drawdown on Monday, which is very explosive. So we got to revisit all of that as well. So give me your thoughts on your trades of the week and how you survived the big volatility of semi-crash.
Yeah, wasn't that something? That was sort of, I've never seen such a good bad day. I mean, or not in a long time. I mean, we had such amazing rotation happen there, and it was all taken very, very negatively, of course, at first. The markets just kind of, got crushed. And of course, we have to put some of the blame on heavy, weightings in the index, right? Some of the reason that the index has done so well over the last couple of years is, a reason that things kind of pull back a little bit because we have these big weights in there kind of having a very, very big impact. So I think it's kind of interesting to see that the market is not doing a whole lot. If you kind of sort of take the sort of average out what happened over a few days, except under the hood, we do have a lot going on. And we talked about the software names. So they bought the dips in some of the areas that were deemed to be a little bit more insulated from the news that came out. And the news that came out was very impactful because, and I remember, Torsten Stock talking about this, saying, the whole world has this massive leverage. The markets are sort of this big leverage play on Nvidia. I mean, Nvidia it's in something like 480 ETFs, and I mean, it's literally everywhere. You don't think you own Nvidia? You own Nvidia. It's in there
Apple,
somewhere.
and Microsoft, and Google, and Amazon. Yes, it's definitely the Mag 7 game.
It is, rightly so. That's Nvidia. I remember talking about it back in 2018 to advisors and people who'd listen, and they were just more or less kind of in the sort of gaming GPU game, but they're sort of turning the corner in terms of AI. And so it was
mining, and then AI, and now the future is robots. So they always have a story to tell.
Always a story, but it's nice to be able to rotate from story to story. And I remember when the sort of blockchain thing kind of blew up a little bit in 2018, I think it was, towards 2019, Nvidia really suffered, and everybody sort of forgot that they're involved in these other areas. And so they kind of play a little bit of hopscotch, don't they? And this is going to be the latest sort of maybe mini winter for them, because this is a very big revelation that perhaps, I mean, I think the jury's still out a little bit, Samantha, because, depending on what article you read, some people say, no, this is for real. I've had very knowledgeable people say, no, this is not exaggerated. This is very, very real. The cost coming way down, and the quality of what the inference, or the quality of the AI that's coming out of this thing at a fraction of the cost is very, very meaningful. And then others say, well, they're kind of piggybacking on a little bit older GPUs and skirting some rules and things like that. And I thought, well, rules? What are you talking about, rules? Somebody's like, well, they're stealing data. They're taking all this stuff. I said, what do you think Google's doing? What do you think all these companies are doing? They're stealing data left, right, and center, basically, or borrowing it, right? You have to opt in. But if you don't want to opt in, you got to go through 5 pages of customizing what they can kind of steal from you, basically. So everybody's kind of in that game of sort of grabbing data everywhere they can. And so it's been interesting. So we've seen that, the VIX, interestingly enough, the VIX has been very, very under control. We saw the VVIX, which is the volatility of volatility, drop below 100 today. So I like to see that. The recent lows were kind of in that sort of low 90s. Down around there, I'd like to start looking at protection again, because that's what I think when protection starts to get a little interesting.
This is, I was going to say, because last time we met last Wednesday, we were talking about the market. I mean, obviously this very sharp advance from the November gap up, right, has now filled as of January 13th. We talked about that. We showed all that, and everyone's bullish. And I wrote this kind of article about mocking, the consensus is hard rally from here, but here are the bear points. And it just so happened that I had a little trader's instinct, a little tingle in the back of my neck where I said, I think it's a sucker's rally. So that was last Wednesday, even though we both agree Q1 is still, it's just determined to stay lit or bid during earnings. It's the clench, but the point is not to fall apart during these macro and earnings event. It's just very unusual. It usually happens more towards like March options expiration. So you and I are both in agreement that big picture, we're still bullish, but I knew something was wrong. But I didn't know it was DeepSeek. I had zero idea it was DeepSeek until this weekend, and I was obsessed about it. So long story short, I've done an enormous amount of research and writing about this for clients. So you can kind of go in, and if you're looking for the bullish bent, the bearish bent, I've laid that all out, both sides, because I want folks to, do their own due diligence. China's hand in all of this and what I think the risks are moving forward. But that's not really the focus of the show right here. We did have a little, you had said, VIX is cheap. It's good to get some protection last Wednesday. I had this feeling like it was a sucker's rally for a shake and bake. Didn't know that semis were going to dump between 7 and 27%, and the utilities in the data center. So basically this kind of AI ecosystem was sell first, ask questions later. Now, we have been recovering in large part, but this is just how the market is wired. It's this euphoric, we're going to leverage this faster, cheaper, better, and integrate it with all of our software. So getting kind of the point where gold is still rising as a macro trade. I want to talk about that. But at the same time, China tech in particular is rising, which was also a core. Like I wrote about that on the weekend and last week, because BABA was starting to come up again. It obviously took off like hot fire flames. So China tech is in play. And then of course, this rotation that we had very sharply on Monday from hardware to software. So you happen to already be in stuff that is it's kind of the Bitcoin, but like your Reddit, right? And your Hood. Yeah. Hood is more transaction
type stuff. Exactly.
You're already in it. So you didn't have any interruption, but the Nvidia did surprise. So we kind of need to talk about how to protect, especially with advanced options when you have a 17% drawdown in a Nvidia. Ouch. So I want to kind of get into the stuff that is still working, which is of course my gold theme, the BABA, China tech, the software, hit or miss. I had just reviewed now for clients. It was incredibly bullish, but I said, I've got no edge with earnings. And today it dropped 13%. So we still don't know. We still don't have a crystal ball when it comes to earnings. So we need to talk about tactical ways to protect the software plays that are hitting earnings. Not to mention BABA, which has been hot fire flames. I think you have some too, which is important. And I say this with emphasis because China's on holiday. So the Chinese ADRs that have been running K-Web contingency, do they hit the wall next Tuesday when China opens because there'll be a big NAV differential, or do they take off like hot fire flames because the Chinese start coming in and see this big move and start to chase it. So
well, China's back
talk
on the
about
map,
that.
right, Samantha? I mean, that sort of puts, and there's some rumors that Baba is going to come out with their own sort of,
No, they did.
Oh, they did already.
Oh yeah, no, Jeffrey's already been using it. So
Oh, he's already
he's
been
an
talking. Oh,
expert on
wow.
Baba. If anybody at LaDuc Trading has any questions about Baba whatsoever, this is his #1 position in his portfolio, and he knows everything about it fundamentally and technically, and he knows the backdrop of the China macro better than most. So long story short, yes, they open on the 5th.
Yeah, and so that's an interesting play. So I had Baba, I had some downside, I had risk reversals on to basically try to finance some upside. Didn't work out a few months ago and reversed down. And so we got into the 80s through some of my strikes. I had an 88 strike, a 92 strike. And I thought, well, okay, this is a very, very cheap stock. It's got a lot going for it. It's in China. So you never know if the market will eventually kind of latch onto it again. And of course, it just needed an excuse. And it got going. But I remember we were sort of looking at, and this is kind of a good lesson in covered calls, because a lot of probably some of the people watching, some of the folks watching trade covered calls, and part of the challenge sometimes is really knowing when to cover and then when to not sell calls anymore. And so one of the things that I always like to say is, I don't love selling covered calls, but I need to be given some sort of edge. I need to be given some sort of compelling reason to grab that premium, because that's what we're doing is we're really turning. We always have to be careful because we're turning an asset that is a little bit on the growthy side, and certainly it is in Baba. This is a growth stock, and you're turning it into a kind of a bond proxy, right? When you sell calls, you're just sort of saying, well, listen, I'm going to trade away some of my upside for a little bit of premium. So it's not something that you should do all the time, because
Definitely not China tech that moves so quickly. Yeah.
Part of the reason you're into a good stock is because you want that upside potential. So you have to be somewhat strategic. And so it came down, I picked up a whole bunch of premium, but definitely was underwater for a bit. And then we had a little period there where I was grabbing some covered calls as the premiums were a little bit richer, right? We sort of had this big sell-off, the premiums got nice and healthy in there. So grabbing some covered calls. And then we got into this sort of consolidation phase where, quite frankly, option prices just got really, really low. And I remember at some point, right before it popped this for a few days, I said, I literally said in the community, I said, I'm just not, I want to sell covered calls against my position and continue to grab some premium, but I'm just not seeing any compelling premiums. And so I said, I'm just not going to do it. I do not want to give away, and you can look at put sales in the same way. They're basically the same thing. You're giving away upside essentially in a stock that's moving up strongly. And I said, I'm just not being given any sort of compelling premium. So I didn't sell them. And so I was wrong for a bit. It pulled back down again, but now it's had this wonderful run. And I've sold a few calls on the way up here as the premiums have improved as we head up, because I'm starting to get some edge, right? If a stock has come down a ton and you like it and you're not being given any kind of volatility edge, then it doesn't make sense to try to extract premium out of it. You could just sit on it, right? That's the whole reason you want to be involved in it, is for this thing to move up over time. And so it was kind of a nice little lesson, because I didn't get in my own way. I grabbed the premium when it was there and when it was a little bit more interesting to me. And then once it was time for this thing to break out, I didn't have those things sitting around my neck like an anchor and giving and capping my upside. So, that's a good thing for folks to remember. Just always kind of look at it as risk reward. What is my risk? Well, my risk is that you have two risks, right? You have downside risk, of course, which I'm assuming you're mitigating by owning something decent, at least selling options on something decent, which is also why I always tell people, make sure you like what you're trading against. And then to the upside, you need to mitigate that upside by not being short calls. Now, we can't always get it perfectly. This is going to happen. Sometimes you're going to get run over, and that's just life.
And this is why I'm bringing up the monthly chart of the Shanghai, because you're talking about Baba, which is something I have followed extremely closely and recommended at the IPO low last January. So as a trend trade, this is choppy. As a swing trade, there are key times to come in and grab it. But on a trend, not on trend time, I meant on a chase like we've had of the past week, right? Where it started to percolate on Friday and then followed through like hot fire flames for a whole solid 5 days. This is different. This is the trend time frame. So the trend time frame is on a monthly. This is the Shanghai. Now, right now, the market is closed. But when we open next week, this is going to be very, very likely above. I'm going to zoom out a little bit because I think that might be a little little confusing. Back here at the bottom in 2006, before our market, forget our market, this actually broke out. I call it the wall, where you can just see a trend line break, and it got extremely parabolic. This happened again. So we got in purple, and that was absolutely a shorts nightmare. Okay. Then we had it again. There was a yuan devaluation. It was a very, very volatility producing event here in the US because Forex, believe me, if we get rate volatility, it will absolutely spill into equity volatility. And that's what happened because it was unannounced. So at that time with that yuan deval, we also had another breakout. See that? And shorts were crushed. And like your covered call situation, that's stay away, because this is not a time where it's flat. This is a time where it's explosive. And we had an itty bitty little event here in, I would call this very small, but choppy, where at least it got above and then it kind of trickled down and finally moved, but not very excitedly. Anyway, long story short, we are here. So this trend line on a monthly, which right now you cannot see, if I had a crayon, you would see where there's a little bit of a.
Are we just popping up a little bit?
Can you see? I want to see if I could, I don't know how to zoom this out, honestly, but it doesn't matter. But this is not popping out. But when we open next week, it will, because this is a monthly chart and the market in Shanghai has been closed for a week. So the point is, we have to see if this is going to be explosive. In other words, I'm not talking about US investors here. I'm talking about over in Shanghai, this momentum, this gambling mindset that can take hold, especially if there is cutting tech, which it is in the DeepSeek and probably some others. And if they were to get not stimulus per se, because I'm actually not really believing they would, but further yuan deval, there are reasons both from the FX perspective, the macro yields, dollar, same thing that we have over here. Well, over there, it's their yuan and their yield curve that is very much right now feeding this move if we can get and stay above. So that would be, for me, the only cautionary tale. You might be in another situation, might not, it might get rejected. It's not believed, but for right now, this is definitely your risk area of it moving and getting very, what do you call it, excited. So that's one of the reasons why I zoom out and I look big picture. But
where's that recent move, Samantha, on there? Where is that recent move that we had, the sort of big head fake we had a few months ago?
Oh, I can show you that on a smaller time frame. A weekly is much better than the monthly. Hold on.
Okay.
So how are you going to?
But that's important, right? We're actually,
Yes.
if we break through there, that's something that we actually didn't get a few months ago. So this is something that could be a little bit durable, possibly.
So I was very, very negative. But in October, lucky or good, I watched this Baba like mad. Everybody, all clients know, fly on paper. So this, when I actually saw this moving higher in October, and then when it hit the wall, just kind of showed you, I literally did a post. It's hitting the wall. The only way it's going to get above is with stimulus, and it's not time for stimulus. And then we had another kind of knee-jerk reaction in December, which was short-lived. It was only a week or not even a week and a few days. And I said, again, it's too early. We've got to get Trump. If he's going to negotiate anything, he's got to, first of all, get through the inauguration. We still have to deal with all the macro backdrop of China. It's not time. I would say the earliest, and I kept writing this and saying this, the earliest is March. So for this really to get above the wall, they've pulled that forward. In my humble opinion, they've pulled it forward hard. But you're looking at a weekly. Let me just show you our screen two. There we go. So this was December, very, very large, ginormous parabolic run. And then it came back down. That also, by the way, happened to be weekly resistance. I didn't put that red line there. It just happened to be there. So this is the difference between the monthly, where I was showing you big picture back to 2000. And this is just the most recent spike that we had in October. And then most recently in December, we had another little push, but nothing exciting. It's not there yet. That's why I've cautioned, if you're chasing Baba, great, but just kind of keep in mind that we really need to get over the wall. And for right now, we can't really see any price action because their market has been closed for over a week.
Yeah, I mean, I've been selling into some fairly nice premium. So again, just like we were talking about a moment ago, don't just sell calls because something's going up, right? So I read a great quote earlier today. It was from a floor trader from years and years ago. Literally, I read it 40 minutes ago, and it talked about how you really become a great trader once you learn the ability to add to a good position. And so in this case, I'm saying you don't necessarily have to add to a position, but don't get in the way of something doing well. If you don't have any kind of edge from a trend line, maybe a monthly. I love how you look at things from all these different perspectives.
2 hour to 1 month.
It really, yeah. I mean, it can all make sense, right? It's always important to kind of zoom in and out, forest for the trees kind of stuff. And so I love that because you can really get caught in the noise in the moment especially when you trade markets actively, you can really, really lose yourself in the minutia of what's going on and forget about sort of the bigger picture. And so, with covered calls, you want to just make sure that you're getting edge from somewhere. It's either in volatility, it's either on the technicals, it's either in news. It could be as simple as whatever. There's a big lineup around the block for the new iPhone, whatever it's all edge, whatever it is, but have some edge. Do not just sell calls into a rising market, especially if volatility is getting crushed and you're getting less and less sort of compelling reason to do so. So, let it go. Let the move happen. Let it tell you when it's starting to top out. You're not going to pick the top. Very few people are that good, but you're going to look for some sort of indication that a top is forming or that a consolidation is happening and some sort of, kind of pattern that leads you to believe that things are kind of, sort of calming down a little bit. And then that's where you can start to pick away at those spots. So I like that. Just, so I've been starting to sell. I sold some 100s, I sold some 110s, and that's it for now, but we'll see what happens. So I think it's just kind of an interesting market because I think Nvidia, I've had a lot of people ask me about Nvidia over the last few days and they have positions. And I said, well, it's not that, and I know Gene Munster was talking about it and Gerstner came out and he was talking his book because he's long Nvidia and he says, oh, nothing's changed. It's quite possible that nothing's changed from the perspective of valuation for the near term or maybe over the next year. I agree with that. It's not an extremely expensive stock, but you have to think of where we've come from. We've come from 2 years of just it being the poster child for AI and for everything it represents, and it's gone up however many times, 5 times. And so we have to always remember that market performance comes from the margin. And so if that marginal difference in narrative has worked into this story, it is no longer the same story. So I'm just telling people, look, I'm not getting super bearish. I do think it can head to the low 100s, but I'm not committing a lot of capital.
We were there on August 5th. Remember
why not? I mean, this is not the same story anymore that it was potentially.
This is actually much bigger. This is actually much bigger. I didn't spend 36 hours writing a post for clients on this.
I bet you did.
No, it's many pages, but but it is not a trade right now. My big, Manhattan Project 2.0. This is the bigger risks of China as it relates to Nvidia in part. But anyway, bigger picture, we still have a very bullish options backdrop and where we have to come together and kind of talk about what we're looking at. So I'm going to share with you what I posted this morning for clients because this is still my baseline bet. Okay. And then we'll kind of go into some trades as well. We've talked about this week after week after week. We always pick up a new theme. Last week, my theme was, I think it's a sucker's rally, although I'm still bullish, right? I can't, we've done nothing wrong yet. It's just, that's trader's instinct. That worked surprisingly. And then we're right back into this rotation into cloud. But I do want to show some themes that are definitely working because we've been talking about it as well. Gold is still doing awesome. So let me just show you what I mean by that. Okay, for those who play continuous contract, that's over here. I happen to put it next to the dollar yen because I'm actually right now in this basket trade of higher bonds, yen and gold. We talked about that. It's not always tightly correlated, but sometimes it really is. And then this is an example where I'm looking at a one-day chart of continuous contract, and I'm looking at a monthly ratio of my silver gold. And this has been the reason why the backdrop of gold has been very, very bullish. So, and for all the macro reasons, you've got to read my big, deep dives. So we're not going to get into that here. But the reason I kind of put that out there is because gold itself, the paper GLD, let me just show you this, was one that we talked about a month ago. And then I said, silver's not ready, but if it stays above 27, and then last week I'm like, it needs to stay above 37. This was one that had formed a bullish engulfing, right? After all this right here, warning, before Trump came in on October 29th, and that rotation to Bitcoin, kind of stole some of the thunder. Anyway, we've been in a chop fest on the daily. I couldn't trade this on a daily if I wanted to, but on a weekly, it's beautiful. It is a gorgeous trend. We had a pullback, this is true, but this is also into Trump and all that Bitcoin nonsense. But anyway, the point is right here on the 6th, I was like, this is gorgeous. This is a bullish engulfing. Looks like we want to break higher, technically speaking. We got some good reasons for it on a macro front. Point is, we definitely followed through. I said it had to stay above 145, and then it gapped up. Wicked bullish. Now it's really doing well, and it's taking out, or soon, it's trying, even though it's getting a little chased, it's trying to take out the highs. So that's something for GLD that's been in place for a month, right on that bullish engulfing. Silver, we talked about last week. I said it's trying to base. Now it has to stay above, right? It was 27.17, then it was 28. Now it's pushing higher. And then I had two in particular miners that I really like that are also doing extremely well. So here's silver. And this is a situation where we talked about this because gold, the GLD was cheap. They were cheap. Silver is like, it's the difficult child, right? You got the golden child and you got the wild child, and gold is, anyway, easy and silver is not. So this is basically what I'm talking about. It's trying. It is trying, but it's also trying a lot of people's patience. So what is easier sometimes is look for the stocks that are breaking out, right? Like the GLD, come in after it's digested and then buy those cheap calls that we talked about. Now it needs to really go into some, call spreads. AEM is one that has been recommended for a long time. Once gold started breaking out because it was a gorgeous trend, digested, broke out, pullback was shallow, breakout. It is digesting, but look at this. And now it's breaking out higher. So pick your miners. I like these particular ones because they have done nothing wrong from a trend perspective. And that makes it easier to then go in, and all this nonsense I worry less about, right?
What about Newmont? Do you watch Newmont,
no,
Samantha?
I do not, because it's terribly run and they had awful, totally wicked, awful earnings. And a lot of institutions actually dumped it because it was so bad. This is one that's coming up from the bottom. And the only reason it's rising is because the underlying is rising. It's still underneath the 200. It has so much work to do. It's not my flavor. Like I said, I like stocks breaking out. I have to be very convinced of an oversold bottom fishing play like a BABA. And BABA is very different because it is ridiculously oversold. It is ridiculously left for dead. It is ridiculously undervalued. It's just ridiculous. So this is a whole different kind of macro trade. But long story short, the other reason gold and silver did well, and it wasn't Chinese New Year, although apparently there's a correlation with Chinese New Year and higher gold prices. It is because of the falling dollar and yields. That's very, very bullish precious metals. There also right now is a lot of more rumor, I can't prove it, because of the potential of expected Trump tariffs on precious metals even, that's causing London to kind of move or deliver gold, and then there's too little of it. So do you remember years and years ago, Real Vision used to run and other people used to run, the real gold bugs would run these videos before YouTube was really a thing about the fractional shares of gold and how we didn't have enough and it was going to bankrupt. It's back. So gold is getting bid up in the spot price as well because of that. And then this is under the radar, but clients know I'm diehard for this. And this is a trick that Jeffrey taught me in the last 2 years, is soft commodities trade really well as they move higher. Gold and silver move higher. It's usually soft commodities and then precious metals and then industrial metals if there is a durable inflation theme. Right now, you've seen what happened to egg prices. It's health related. It's bird flu, cocoa, beef, and now lettuce. Because of the California fires, believe it or not, it took out 70% of U.S. supply of salad. DBA has maintained its strength. These are all the type of things that I'm looking at, from technical to intermarket to macro to fundamental. It's weird, but it's my thing. And then I layer on options. So for me, options then is this conversation when you said gold was cheap. And I'm like, yeah, and it's also really time to move higher. So this is the time to go in. Now that gold has run for a solid month, this is the time to get a little bit more, are we going to go parabolic on this like Baba just did in a week? Or do you rotate this play by doing a call spread, selling? What do you do now? What if you're just getting into this? Clients who have missed this the past month and now are saying, I want some gold. What's your suggestion now that we talked about this the past few weeks? Those calls are no longer cheap.
Yeah, they're no longer cheap. One interesting thing is, I mean, it's mostly concentrated in the short term. I'm seeing that upside is actually not very expensive. I think it typically is, and what happens on the run is people start to sell out their exposure and it kind of compresses. So there is still a little bit of a play there if you do think it's going to have some follow through. There's some potential if you sort of pick up some 265s, something like that, kind of between February and March. There's probably a little bit of something interesting going on there. It's interesting to see the upside call skew very, very compressed in gold right now, which is not very typical. So
why? What do you mean? Show your chart.
I love watching the skew because it kind of gives it can inform us as to what's going on out there, how people are feeling. Are they very euphoric? Are they kind of complacent? So we can see that normally that upside skew tends to be quite steep. And right now it's very, very flat. We did see a pop up in vol a little bit today, but still very flat. So you could pick up some upside and not have to pay that more expensive skew. But when I look at the different terms, so even if I go out to Feb, it's pretty flat until you get really into those way out of the money calls. If you looked at something like March, still not bad. So that's something where, you could go into gold, probably call spreads at this point. You could do a finance play, which is of course one of our favorites. We always talk about these things where you can kind of say, I often teach students, I say, listen, if you feel like you've missed the run in something,
yes,
you can just create a bit of a finance play by going in and selling some sort of lower put and using that to finance some upside. But you're really not getting a whole lot of premium. That's the problem with gold. Overall, I think for the explosive potential, there isn't a whole lot there that you're receiving. So for example, you go in and for a 250 put, you can sell that for, maybe the spreads are wide now because they're closed. You can get maybe a couple bucks for those. That's not super compelling to me for something that has the potential to move quite a bit.
I like this move higher, period.
Yeah.
Even rolling call spreads at this point, but I just like gold. I think we have a really strong case for higher gold and any time frame, but also China tech. If China tech does take off next week, NASDAQ will get hit. Most likely there will be a start of some rotation, not hit like we had Monday, but definitely the point is it's going to be hard to keep it going if money's rotating out of tech. So I wanted to get your thoughts on which tech are you playing right now? Because we talked about the cloud a lot.
Well, I think it's a mixed bag, of course. I'm not sure I've seen that kind of move. I was talking about the dispersion earlier, and to see, Meta run up huge and Microsoft get crushed a lot. There's really sort of a little bit of everything going on within the mag right now.
Completely flat after hours. It exactly where it closed. It's a perfect premium seller's dream. All of those mag plays, all of them. It's just, I read this very differently. I know the AI euphoria, but I also have a smell test on me that is ridiculously alert, which means investors are still wondering if it's really as good as the spin that they're hearing right now. When Sam Altman and the CEO of Microsoft are buddy in these pictures going, this is going to make us, also cheaper, better, faster. And they're really trying to defend their closed AI where China has just come in and made it open, really open. We know when we're getting gaslit now. It doesn't mean it can't continue. But the point is you got to look at both sides of it. And I think the investors are not completely convinced yet. So we're going to need to hear a lot more, I think, for investors to be pacified.
Zuckerberg came out and he said, no, we're not going to slow down. We're not really slowing down much on the spend. So I think people were kind of looking for some indication from him to say, oh, wait a minute, maybe we're overspending. I don't know. Maybe that's, saving face or something like that. But I'm going to guess there are a lot of questions being asked. Do we really have to spend this kind of money? It always seemed a little crazy to me. You need 4,000 GPUs to do this. You need $2 billion worth of GPUs to run a glorified chatbot. I mean, I'm like, what?
Well, there's still a lot more development out there. I have really the fortune that I have some technologists. I'm not one. I'm a solid generalist, but not a technologist, who come in and they're like, listen, I know you worry about Nvidia with the round tripping, and that's real. And it's, by the way, also legal, but they also have this momentum in robots, and they're just not going to stop. And I get it. I'm like, I don't say short it. I mean, obviously, this. We've talked about the long side of this for many a moon. But the point is, I still don't trust it. And I think investors now are alerted to this and they're starting to be a little bit more critical in their thinking. But in the software side of things, this IGV, this IPO rotation cloud, forget FANG right now. FANG is let it kind of digest. We get out of earnings unscathed. We get out of BOJ unscathed. They did exactly what was expected. We get out of the Fed meeting unscathed. What we're looking for right now tomorrow morning is PCE. Next week, we've got Scott Bessent up to bat. First time our Treasury Secretary is going to tell us how he's going to finance our fiscal morass and spending. And they've already put a kibosh on a whole bunch of spending. Trump is in austerity mode. We'll see how long that lasts. And then, of course, we've got end of the week, we got non-farm payroll. So we do have some data that's coming in, but all this earnings is exhausting, right? After the election, which was exhausting. Now we're in the thick of earnings, not to mention economic data, and what I believe is stealth escalation by China saying, Trump, don't you dare raise tariffs on us. We're going to hurt your Mag 7. Stay back. So we'll see how this all runs out. But right now, the IPO, IGV sector rotation, which has a lot of the cloud plays that are seemingly benefiting from this AI, free and open DeepSeek, and a much bigger data set from which to work and improve. What are some of your picks in that space? Well, I have my favorites.
That's the good news. I mean, Meta, I've been loving since the 400s. Yes, and so to me, that's it. Everything that kind of uses, it's kind of almost the big aggregators of data, the sort of those superscalar data type companies like an Amazon, Meta, those continue to be my favorites because I think, and I mean, I think everything does well, and I think that's what we're going to see, maybe a continuation of a broadening out. I'm starting to almost think maybe we get a bit of that melt up from this very event that we had this week, where it's sort of kind of like, well, if AI becomes less expensive or more accessible to everyone in general, we move closer towards that sort of concept that if we can just improve things 1 or 2% for every kind of industry and company out there, then that's going to make a meaningful difference to GDP and earnings overall for everybody. So I think it just, I think that's a very positive thing. And so I think that's what people have latched onto over the last 2 or 3 days. And but there's definitely, like ServiceNow got crushed today. So there's definitely some, you have to be careful out there. So there's
I had just talked about this literally this whole week about how now, but I have no edge for earnings. Net, which is Cloudflare. Here, let me just do this real quick and then we'll go over yours again. But this is just what I was kind of referring to. So this is Net, right? We're talking amazing extension before earnings, careful. This is Now, which had, and I've been on this. This is one that was actually recommended because it did a great breakout retest and then started up my beautiful 10-week. Look at that, gorgeous, 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 gorgeous. Did a little bit of digestion, like so many stocks came in, since December, right? Underneath the surface, there was some selling and then we had some shake and bake in the index, but all of these were digesting, talking about selling calls. This is a perfect time to do it. When the market's, when it stopped going up and it's doing a pullback, but this is different. This was boom. This is a big old gap down and it's of size. So that has to repair. But there are so many others. Snow is another one that is looking pretty good, but it has earnings at the end of the month. I mean, I could keep going. C is stunning as well. So we have a lot. I had recommended a whole bunch that were just coming up. This was back in October timeframe, the SaaS reacceleration. And look at that pullback, right? That's a great time to sell calls when it hits a trend line, then it comes back and then it starts to get supported. This doesn't have earnings until March, but it's got that nice kind of scoop look. Or GitLab, that was another one that broke out, beautiful, back and then came back down and now it's trying to get and move higher. So there's a lot within the software or the SaaS reacceleration space that is definitely working, but not smoothly.
Right. And so we have seen a little bit of a pullback in some of those names. I think GitLab might have had a little bit of a pullback, but look, I think it's going to be a bit of a trader's market. I don't think we're going to zoom too far past 6,100. So I think we're going to get these opportunities under the hood. We may see kind of a calm VIX because we'll have some dispersion in the market where some big cap tech maybe struggles a little bit at this point. Meta's done well, but maybe a couple of the others, where's Tesla going at this point? I mean, that was a terrible quarter, and they don't care, but
Because
is
why?
that
Because Elon Musk is talking AI. He's talking
right? It's
robots.
everything.
He's talking robo taxis. He's talking about future growth. This is the story they continue to sell, and it works. The stock is what, 600 PE or something. I mean, I'm making that up, but I mean it's very elevated, but it doesn't matter because they're telling a story. I mean, it matters, but fundamentals don't matter right now. It is the story.
It's a moonshot company, and there may be something to it over time, no doubt about it. So it's going to be a software company. I mean, they're doing great in things that aren't very profitable. So I don't know. Amazon wasn't profitable either for a very, very long time. They figured it out, but
Oh, Amazon's actually a good one to sell some short duration calls against because it actually did. Let me just show you real quick, and then PQ has a question just for giggles here. And I really am bullish on Amazon as well, right? This is a stunning move. And then again, I always work from the week, always work from the week. And then it pulled back to support, which is this 10 week, and then it broke out. But just recently, right? This is the Monday shake and bake. Look at this massive move higher, move lower into the 21, and then it reversed the same day. It went red to green on this euphoria of, oh, don't worry, everybody. We're going to be fine.
Right.
This isn't about CAPEX. This is about now we found out how we can be cheaper and faster and better. This, however, formed a bearish engulfing on a weekly. So this means it has some digestion. It's not hot fire flames. So just kind of keep that in mind on the short duration. It's pushing back.
okay, all right,
That's
good.
short
Well,
duration. That's not the trend. You're still bullish the trend. I know.
I'm still bullish the trend. I mean, I think they're doing everything right, and I mean, Amazon's famous for kind of doing its consolidating thing for quite a while, and I like it. I'm going to stick with it. I've got a finance play on that one. This is an Nvidia downside broken wing butterfly that I put on just a couple of points on Nvidia here. So this is where play with the structure a little bit and bring in that bottom strike a little bit closer to the middle, and what that does is you sort of, it's almost like transferring some of the risk from the back end to the front, and that makes sure that you actually make money. One of the worst things about butterflies is you can be right on direction but wrong if it goes too far. So this gives you a little bit of a hint here. The volatility is high. I think if it moves down towards 100, we see a little pickup in delta here, right? It's a little bit, and I positioned it at, I think it's a Fed position. So I do need it to kind of happen fairly soon, but it didn't cost very much. Now I have a few people who've asked me, well, what do I do with these Nvidia positions? I said, look, if you're short puts on it, what you could do is create a kind of a pseudo collar. You could sort of sell an upper call spread. If it makes its way up towards 127, 128, sell maybe like a 135, 140 call spread and use that premium to finance a downside put spread, something like that. If you really are unsure about this, and I think this could be dead money for a little while, so it may be a case of, look, just kind of get out and then look for another opportunity in the meantime, wait for this thing to maybe drift down towards 110, 100, and then you can take another look again. But if you want to hold on to that position, you can do that sort of pseudo downside collar if you're just short puts, because you can't sell a call against your short put, because if it moves up through the put strike, now you're basically going to be short a naked call at that point. So, but if you're long stock, you could collar it here, right? And one of the nice things about collars, they're relatively option pricing agnostic. So if you are nervous, you can say, well, look, I'm willing to give up my stock at a certain point. I think the narrative's changed. I'm not thrilled to be long it at this point. So, but I want to hold on. Maybe I have a really low cost basis. So you can sell like a March 135 at 820 and then purchase a downside put, or maybe a put spread would be better unless you think this thing could really, really collapse. So that's a nice way to protect the downside there.
And let me just show you a trade that Mikey posted from his channel today for you to do some sleuthing. Do you see this right here? Large equity trade came in right after the open. They sold a lot of Nvidia. Can you see that amount?
Wow.
But look what they did. It was tied to this, where they then did a bull risk reversal, basically, same strike, May 125, which is just a few dollars higher.
Puts on the call. Yeah, that's
They did a synthetic. What do you think about that?
Synthetic short stock, basically. They're just getting the heck out. They're just getting the heck out of this thing. They don't want a part of this thing anymore. So that's
what I wanted. That's what I think is happening that people aren't seeing. They're in May. So, and this is that synthetic, like you said, is it replacement or are they?
It's just it depends. You need to know a little bit more information, but it's basically they're just synthetically selling stock there. So they're selling stock. I don't know what's tied to what in terms of the actual stock, the upper position, but they're basically long put and short the call at the same price is just short stock, right? You're selling stock effectively. So that's just, basically you're selling stock. So I'm not sure what that's tied to, or if that's,
we don't know what their
maybe part of it.
portfolio is. Correct. I'm just saying, but that's the kind of thing underneath the surface, because I have this thesis, right, that there are investors that, not the ones that already got out, the 17% drop that, retail came in, by the way, and bid up. There was a big piece on this that came in and bought like 600 million. Retail bought 600 million. Yeah, but it dropped 600 billion in market cap. Okay. But the point is, there's some selling underneath the surface. That's all I wanted to say. It's going to be.
Yeah, I mean, you have to think that a lot of people are sort of going, well, this isn't the story that it was for a long time, so I'm just going to get out. Now, I don't know if that means it goes to $80, but at this point, people may feel like there may be better places to put the money. And don't forget, 119, sure, it's down from 152 or 53, wherever it was, but some people are in this thing from 20, from 10, from 15.
Oh my goodness. Pelosi, she actually exercised her position on January 14th, because I saw the disclosure, right? I posted that, and her basis was $12.
Wow.
Yeah. So yeah, she's also exited right in time. Now, Patricia has some questions in Q&A. Could you take a look at that? Because they're structure questions, and I think they're good ones.
Patricia, let's take a look here. This one, all I see from Alejandro. No, I don't think I do.
All right, let me read it to you. For selling covered calls, how do you determine position size? Example, if you own 1,000 shares of BABA, how many contracts would you sell covered calls on as a trade?
Well, that's a great question, because some people feel like you got to sell your full allotment. So if you're long 1,000 shares, you can sell 10 calls against that stock, but you don't have to, right? So if you're very bullish and you kind of want to sort of meet halfway, you can hold on to 500 shares that will be unencumbered by any upside call ceiling, and then you can sell 5 calls against the other 500 shares, or you can just kind of piece it out as, like, I would say, if you wanted to be fully short calls against that stock, maybe piece it out over time. So you could sell 2, you could sell another 2 as it moves higher. So that's a couple ways to approach it. But I remember I used to run a couple of funds where I would sell 1/3 only against any long holding. And so that was a way to basically achieve 2 things that you wanted. One, which is you want to maintain some upside potential in the underlying holding that you have. But at the same time, you also want to generate a little bit of incremental sort of income or premium from call selling. And so, that's a great way to do it. Sell 1/3, sell 1/2, and then you'll never sort of feel bad about anything, right? I always like strategies where you're not going to lose too much sleep, because if BABA keeps going, you'll be grateful that you have that extra 500. But if it pulls back, well, then now you've had some calls that you've harvested there. What's the next question? Further detail knowing the position if you want to generate income on 1/3 or 1/2 the position. Well, there you go. Yeah. So that's what you can do. You can,
like you just said, you did 1/3 of your.
Yeah. So sell against 1/3 of the position, against your 1,000 shares, maybe you'll sell 3 calls. Or maybe you'll sell 1 today and you'll sell 1 more tomorrow when it pops again. And then if it pulls back, sell the other 1/3. Right now you've put in a top on the stock. That's one way that I always like to approach covered calls is, as the stock is going up, why get in the way? Once you've established a little bit of a top and it pulls back, maybe that's your opportunity to kind of say, okay, you're never going to pick the top, but it's your opportunity to say, okay, the stock has found a happy place where it does not want to seem to move above. That's where you can start maybe selling your calls, or wait till it comes off a little, and then at least maybe the vol will jump a little bit, right? So if the implied volatility jumps up, you get a little bit better pricing. So let's take a look.
Your rates calm. What is this?
So rates calm. So this is your move index. So interesting. Remember months ago, Samantha, we were looking at the move index was just off the charts. Crazy, crazy. So these are some of the things that lead me to believe that we are maybe in a durable kind of calm scenario. I know sometimes you and I maybe don't agree, and there's always potentially something like a like a DeepSeek around the corner or a yen trade blow up or whatever it is. But right now we're seeing sort of risk gauges come back, and the move index is a shorter term reflection on the rate side. TLT, here's your TLT implied volatility. So so basically people are sort of saying, you might agree with this, people are sort of saying, well, we're getting pretty comfortable with what we feel the rate environment is going to be over the next 6 or 7 months, right? We're not that nervous. We figure nothing crazy is going to happen. Now, longer term, there still remains some uncertainty because, of course, is inflation rising? Or do we have these other issues with, deficits, things like that? So that the longer term rate vol still remains a little bit on the higher side. In fact, probably 75th percentile versus for the move index. Here's your spot vol beta. Again, something we've been talking about for 4 or 5 months. How reactive is the VIX to a move down in the S&P? And so this is showing that it has been very reactive at times, August, and then more recently, but it's really, really coming back down. And you sort of saw that on Monday. I don't know if you noticed, but we had this really, really fairly substantial sell-off. I think the NASDAQ was down over 4% pre-market at one point. And the VIX got to
was down 3%.
It was a good sell-off, right? It wasn't that much worse.
It was only down it was 3% pre-market, but it quickly bounced. Like those puts monetized, the folks that came in Friday, which were, by the way, very heavy on the short side for Nvidia and SMH. Very large puts came in. They monetized and we bounced. We closed down 1.4%. So it didn't look outsized.
And the VIX wasn't, I mean, it hit 20 to 21. I think it maybe hit 21 a little bit higher, but it wasn't anything outrageous. So we are seeing a little bit more of a tempering of that sort of knee-jerk reaction from the VIX. It can change, but for now we're sort of seeing that people are a little bit less nervous. Here's some of the option pricing going into earnings season here, quite high on the single stock. So what this does is it compares single stock option pricing to the index. And so we can see that one of the all-time high, or the all-time high, was in July of last year, ahead of the big dipsy doodle that we saw in August. But again, we're seeing very, very high pricing going into these earnings. So people are a little bit, at least expecting some moves, which we're not getting, right? You mentioned earlier, we're not getting some of those moves, which is kind of interesting, where anybody long the straddle is not happy on these earnings events. We are not really moving very much at all.
No, they're definitely premium selling events. So
here's one of the trades we did in the community. This is Monday on Costco. We had this big dip, and I thought it's hard when you're already taking heat on some of your long positions. So it's not like you want to like jump in with both feet on a day like that. But I sort of looked at it and I said, it's bad news, but it's not that bad news. And so sure enough, we had some plays. Another one was Meta. So we got in here. I did a long in the money call on Costco. I've been wanting to kind of get back into this thing. It's pulled back from 1,000. It was in this channel, and right literally near the bottom, I picked two bottoms that day on Meta and Costco. Right here at the bottom, I jumped into some June 820s. Those were maybe about an 85 delta. I don't do that a lot, but sometimes I will. The implied volatility percentile was about 20. So for folks watching, try to pay attention to where the level of option pricing is. And you can do that by looking at, Thinkorswim has an area on there where it'll give you your implied volatility rank percentile, the historical volatility percentile. And when you are in that sort of lower third, which this was, the 20th percentile, that option pricing is very, very low. And so that's where you kind of go, okay, I can do something different. I don't necessarily have to jump on a call spread. I can just kind of pick up a call and play that.
Also went out in time. So if you had plenty of time, you wouldn't be hurt so much. It's quote unquote what I call low risk entry, LRE. Whenever I put that, I put LRE in it's my codes, my shorthand to clients, because I'm looking at, this is where I think it's either stopped going down or stopped going up, right? That's your kind of your level to trade against, short or long. Same thing with options. If you're adding June, it's a low entry. That's a low risk entry. So that's a good one, especially
Low
80
risk entry.
delta.
They were deep. Okay, they weren't cheap. They were $140, but that's a lot less than $930. And because the IV out even at that strike was relatively low, relatively under control, you didn't pay up too much for time period. That's one thing you do have to watch for when you do buy something a bit further out. You do have that Vega exposure, right? So when you buy something near term, you don't have as much of that. Longer term, if volatility adjusts a little bit, you can make or lose money when you have those slightly longer term options. But when it is trading sort of in that lower sort of 20% as traded historically, then you feel a little bit better about that. So sold those today. And then this was the other play. We kind of came in, and I've been wanting to get involved in Meta. And so it kind of broke out here. And then Monday happened, and we literally, I think pre-market, we were under 620. So it actually looked a bit uglier under this line. But then we quickly bounced, and I put on this finance play because I thought, well, this probably isn't that bad. And I've been wanting to get involved towards the earnings. And so those were my two big plays for the week. So I bought this for $1.10, sold it $14.95, I think it was.
Awesome.
So got this really, really wonderful move. And what I want everyone to know is that I had an alert in there. So one thing I've been telling students, I've been saying, listen, make sure you go through your charts and put your alerts in there, because you cannot watch everything at the same time. And sometimes I get alerts where I'm like, what the heck is that?
You
Let me
know,
go
my
take a
live
look.
trading room, I talk for the first half hour or so, and then at 9:30,
Yeah,
that's all you can
that
hear
was
are my
it. And
alerts.
that's what happened on this one, Samantha. I put an alert in there around 6:33, and I just kind of forgot about it. And I thought, okay, well, let's see what happens. And boom, pulled back and triggered. And then that's what sort of had me take a closer look. So definitely put your alerts out there, both for places to get in, for places to get out. If you see, let's say you see a trend line. I did that once on Meta where it ran to 600, and I had my alert. It went off, and I ignored it. And then later on, I looked at it, and it was down like $15. And I said, Hans, you didn't listen to yourself. You put your alert in. That was your signal to get out of a position. You got busy doing something else. It happens. And that's where you should have acted on it. So I love those. And now on a day like Monday, it's like a symphony of alerts going off. So you of course, it's overwhelming because you have all kinds of things happening, but go through them, take a look. You put those alerts on there for a reason, and they warrant definitely taking a closer look. So that's simple stuff, right? That's not option trading.
No, but
That's
it's a good reminder.
Yeah.
Also a reminder that the Scott Bessent, a question by Alejandro, is that yes, he will have to determine after tax receipts and all that kind of stuff, the composition of short duration, longer duration financing of the fiscal deficit. But I don't think it's going to be so easy. We've talked about this already a lot, that dollar and yields kind of make the weather. And right now they have successfully, quote unquote, talked down the dollar and yields, but now they're going to have to put in place policies to follow through with that, not too fast. So this is all part of their industrial renaissance move, and it's going to be just damn hard. I think they're going to have a really, really hard time. And that's also part of the fuel of doing short duration, right, that Yellen did, which was adding liquidity, which is why we had such an outsized move since November 1st of 2023. Fed paused, and the Yellen Yahtzee, what I affectionately refer to, is that liquidity pump, because she did short duration. Bessent has been very vocal about that being a bad policy. So if he does, there are other mechanisms and other levers, and we're out of time already. But the point is, I don't think it might be a mix. It might be more of a mix. And that's going to kind of also create some of that chop that we've got in the market versus a directional bullish bent where Yellen would have goosed the market, but her guy didn't win. So, and she's not here anymore. And I don't think Bessent wants to go whole hog tariffs, although, by the way, 2.5% a month is not moderate. It's very harsh. That's my opinion. And I don't think he's going to go whole hog longer duration, because that would also be very harsh. So for right now, I can't answer that because we've never seen this guy perform on a Treasury basis. We've only seen his returns as it relates to a very easy economy, by the way, with a Fed that was constantly pumping and QE constantly dripping into our veins so that hedge fund managers could make a lot of money. So now he's got a whole different job. His job is supposedly to get the industrial renaissance going again. And that's a very different portfolio portfolio to manage. So right now I have no idea what he's going to do, long story short, but I don't think it's going to be a Yellen approach. It might have a little peppering in there, but we'll have to wait and see. Honestly, it's not expected. Not like BOJ or Fed. That was much easier.
My final point I wanted to make was I've got a hood position, which, as you know, I've just loved. So I've been financing an upside call spread with some short puts. And what I did was, this was a couple dollars ago, I should have waited, but I had the 42.55 call spread. And what I did was I rolled that 42 call up to the 48. So I sold the 42, the leg that was deeper in the money, had a lot more delta on it, meaning, more risk on it because it had run so far in the money. And I said, you know what, I don't want to get out of this position because I still like it. I still think that it could keep going. And so that it sort of worked out nicely that way, because while I did take some money off the table, I would have been better off just keeping that full spread. I rolled that long call up, but I maintained the 48.55 because I didn't touch the short 55 call. So now I also bought back the short put that was financing some of this upside. So I made money on the short put. I banked a little bit of money on the call spread, but now I still have it there, because one thing that really burns me is when I get out of a position, it keeps going. I know pigs get slaughtered and you shouldn't be a pig, but this is one way to kind of go, I'm not going to be as big a pig. I'm going to minimize the risk, but I'm going to still maintain a little bit of risk on the table in order to potentially make more. So I have to make a decision. I think we're running into earnings in a few days and we'll see what happens. So, but other than that, next time, we didn't get to this, but next time I'm going to give you guys a quick rundown of probabilities in options and why the advantage is usually to the option seller and that embedded volatility risk premium. A couple good studies that are going to help us out.
We'll do that next Wednesday. We'll have more earnings and we'll have some more data behind us with QRA and I don't even know what else. But I'm going to be gone this weekend, so you'll have to catch me up on Tuesday. I wish you all, thank you so much for joining us. Macro to Micro Options Power Hour. We'll hit it again next Wednesday at the close. Thank you again for your questions and your education, Hans, and hopefully this little review of market and sector and stock selection will help. Cheers.
Subscribe to LaDuc Trading YouTube channel for more macro to micro options power hour and other content.